Good evening. Kenneth Tortoise Capital Nightly Strategy Podcast for March 6, 2025. The Ides of March are coming. Take a look at some sniper trades. Excuse me, sniper trade of the day. This is in the Qs. What's worthy of note here? Yesterday's close, so we're on the 10 minutes. Gap down, OR10. So that means I'm ready to go this way or that way. We get an inside bar with a higher low, opens, breaks out, we enter. It comes back to close here, reverses, exit for about 1R. Crosses the VWAP. When it closes below the VWAP, I'm short, standard risk. About 2.5R. Caught a 2 continuation for a fraction. Market 150. Looking at the 150-day look back. Excuse me. A little congestion here. So this is from day minus 31. Goes all the way back, if it went off the chart, to minus 150. Main thing to note on that is the regression line slope of that 120-day period, which terminates in our tactical space 30 days out, right? So that was just unadulterated bull, so to speak. This is the anchored VWAP for that whole time period, including now the 150-day anchored VWAP. Prices come all the way back to that long-term value. And then inside the tactical space of 30 days, which is the black box, I have that from day minus 30 to day minus 11. And then I put a 20 period, just straight regression line here to characterize those 20 days. And then really what I look at is at the 3 10-day periods in there. I look at these two sort of as the longer term, and then I look at this one as the short term. So you can see that all the damage has been caused in 10 days, how quickly that changes. I want you to notice that the difference between the long-term slope and the intermediate term slope. So because of some weakness in here, this was already slowing down. And then you get a double top. You get a RL10 crossing the RL30. Most importantly, you get the slope of the RL30 rolling over, which hints that as a change of the season. And the crossing of the PSAR and the 30-period Bollinger Band, the collapse begins. And now you get this runaway move to the downside. And that's where we are today with price right here. Now, we made a new 30-day low today. We've got one more support level at 570, which goes way back over here. If that collapses, there is exactly nothing in here that acts as a support level, because that was just buying. The next support level is really here, where the RL30 and the previous SMA 30, which was the start of this long upward move, which just now is rolling over. This is really the support levels, 550 to 545. So there's another 20 to 25 bucks of pain and suffering here, which is another 5% sell-off is already baked into the cake. So that super genius orange man we have not really helping the team right now. So if we look inside the 30-day, we zoom in on that tactical. Pardon me. We can see that a little clearer here. This is the tail end of that 120-day regression line, a straight line regression line, and I care about the slope of that. So if that was perfectly flat, that angle tells me how strong that long-term trend was. And now you can see here, this is this 20-day regression line from day minus 30 to day minus 11. And this was still up for those 20 days, but not as strong as that angle. So it's already starting to weaken. And then we get the RL30 rolling over and the R10 coming through the dragon, coming through the Bollinger Band mean. That's the signal. Here's your anchored 30-day VWAP. That fair value is here. Here's your 10-day anchored VWAP here. Notice how price is really outrunning that VWAP. Here's your 5-day. And here's your 3-day. Here's the 10-period straight line regression, suggesting that's sort of like a fair value right there. And here's that new 30-day low, poor close. And then this is that 30-day low, and if that fails, down we go. So here's where I also want you to notice when that happens, this is where you get the rollover into the fall, and this is where it crosses the zero line into winter. That's the signal. So if you're paying attention to these health checks, that's the kind of insights that you can get about protecting positions in capital. The 30-minute bar, so this is now zooming in on the 10-day and 30 minutes. So here's your 10-day. And that sets the blue box sets the high and low. So here's your 10-day high. Here's your 10-day low. So you get that box right there. And here's that 10-day straight line regression line. There's your 10-period anchored VWAP, your 30-day anchored VWAP, your 5-day, your 3-day. So everything is now below all of those VWAPs, which are all in decay. So this is very vulnerable right now, more so than ever. I mean, it tested here, and there was a couple efforts, but both of those failed immediately. And then this one closed poorly. So tomorrow's going to be really crucial. A Friday before a weekend, as it always is. What are people going to be willing to hold over the weekend? And what kind of news events over the weekend? Man, it is maximum chaos right now. What we have is a condition of VUCA, volatility, uncertainty, complexity, and ambiguity. Volatility is the rate of change. Magnitude, complexity, frequency. Uncertainty is how much of the total pie we know versus what we don't know. Complexity is how complicated, how many different variables are all in play, creating this interlocking network of mutually reinforcing feedback loops. Is it computable? No. So we got lots of external and internal variables all in a state of flux. And then ambiguity is concerned with, if I was able to get a fact, like fact X, out of that and could actually verify it, does it explain more than one mutually exclusive condition? So sometimes you get facts, but they can equally explain two different scenarios, A and B, and both of them can't be right. So that fact that you work so hard to get is not even helpful about trying to decide whether it's state of affairs A or B. So ambiguity sort of undermines even those facts that we can get our arms around. So we're in a state of maximum uncertainty and VUCA, all of the variables. And so this favors short-term trading, no overnight risk. All right, we are in sideways volatile conditions. That can go either way in a hurry. Look, we got everything oversold. Volatility dropping like a stone, have fallen out of the river and are well below this. And if this one breaks, it's back to, like we said, 540, 550 to that support level. So that's a concern. Tech is just getting murdered right now. Even big finance getting smoked. The things that are working, like Wall Street, McDonald's, Coca-Cola, surprisingly strong. We're going to see in a minute. On the holding X day periods, this is for the S&P. I just want to show you that right now the Z scores are all -1 or greater, meaning that we are at abnormally large losses for 40 days, 20 days, 10 days, 5 days, and 1 day compared to 10 years of historical numbers, meaning that on a 40-day basis, we're down 3.8%, which is a Z-score of 1. And on 20 days, we're down 5%, which is a Z-score of -1.4. Over 10 days, we're down 6%, which is a Z-score of more than 2. That's like a 10-day washout. And then we are weak on both the 1 and the 5-day. So that's just bad news all around in the S&P. Now, if you compare the S&P's Z-scores, you say, hey, the globals don't mind this at all. In fact, the more chaos Trump and his minions create, the better the rest of the world feels about themselves. Like Canada and Mexico are just saying, hey, we don't need to trade with you. We'll go trade with more reliable, mature adult partners in Japan, South Korea, and Europe. Don't need the US at all. So thanks, Don. And there's not much glory anywhere else. Look at how bad the techs are. I guess okay. Tesla and Nvidia and Palantir getting murdered. Even Cliff, which started off being favored by the tariffs, is not doing all that well. Marijuana, there's no hope for that. So it's hard to find anything that's working today. Even today, the real estate, or not IYR, I was looking for IYR, got slaughtered today. So anyway, you can see right now about the only place that's working is not the US. Ton of things on the Dow, better than 2-1 on the swing, but it's nuts to be thinking about swing trades right now until we get out of this VUCA environment. Big collapse today. Disney got slaughtered. The story stocks, big percent losers today. Nvidia -5%. Palantir -10%. Tesla -6.5%. So all the beauties getting murdered. Testing their fortitude. ETFs, more than half are on an auto framer favorable. Only regional banks broke down today. So it's a buyer's market, but don't be in a hurry. The globals are generally doing better. Auto framer, you can see there's a ton of things. It's a buyer's market. The daily squeeze is only 2, Walgreens and gold. This is the TC2000 Sniper auto framer. Everything above the red line is better than 2-1 on the risk reward. I'll show you this thing here. The range divided by the range stat is a relatively new thing. So today's range is high minus low. the range stat, as you know, consists of the last 30 days, the range percentage plus one standard deviation of that range. So what that represents is if you took the minimum range was here, then the maximum range of that 30 days was there, then you found the average, and then you took plus or minus one standard deviation, you would treat the average plus or minus one standard deviation sort of as a normal expectation for range. The average plus one standard deviation is what we call the range stat. And 5 out of 6 days were at the range stat or less in the last 30 days. So only one time out of 6, in other words, 5 days out of this 30, did it ever go more than a range stat. So we treat the range stat as the maximum reasonable intraday move. So now if I take range and divide it by the range stat, if today's range exactly equal to range stat, then it would be a 1.0 ratio. And if the range was smaller than the range stat, it would be something less than 1. And if today's range was bigger than a range stat, that index number would be greater than 1. So that's a way to start looking at who were the biggest movers on a relative basis today. And you'll see, well, real estate moved 1.25 times its maximum reasonable move. So that was a large move. Now, there were very few other ones that were close to that. The market itself was 0.9 of a range stat, so it was actually relatively large move today. But this is a way that you can kind of quickly size the relative normalized size of daily moves to see where the big movers are. So Marvel, even though it lost 20%, that was only half of its range stat. That's how volatile Marvel is. So that's a recent addition to that chart. I wanted to be able to see who are the movers today on a relative basis, not just on a percentage basis. Starting to see the winter and the fall dominating in the 4 seasons, mostly in the red on the multi-time time frame NDX. Finance getting slaughtered, tech not good, S&P is very bad. Oracle was a big collapser today. We're going to see that in a minute. The standard top 10 intraday frogs, these are the ones that combine a large range stat percentage. What percentage of their daily of their price is their daily range? Palantir is trading like 12% of its price as a normal move. Crazy. And then you multiply that number by the frog quality number, and that gives you a trading value ratio. So the largest one is the one that has the combination of both consistent moves, large quality frog quality number, and a large average range percentage. And that puts it in rank number 1. So everything in the top 10 is characterized by both relatively large percentage moves every day reliably and consistency in terms of the frog quality number. Right now, Tesla is the best trade by far. Palantir, marijuana, NVIDIA, close second, third, and fourth. All the market indicators showing collapse. No surprises. The z-scores of the regression line slopes. Now the 30 has fallen out of the river. Get ready to test this. If it breaks below a couple more days of painful selling, and this could get bad in a real hurry and erase all of the goodness of the bull. Thanks, Don. All right, that's everything from the report. I want to take a look at. Let's just take a. What we're going to do now is just take a look at 30-minute charts, and we're doing 30 minutes, and we're looking at the black box. That's 30 days, and then the blue box is 10 days, and the red box is 5 days, and that straight line regression line is from days -11 to -30. And then this is from day 10 to day -1. So you get a feel for the maybe in the tactical space, the longer term versus the shorter term. And what we're looking for is the difference between those two angles. And then in the 5 day box, we're looking for things like, oh, that's nice. And there's a COTA 2 forming. And so if that were to break above 34 tomorrow, I could see 5 day high, 30-day anchored VWAP, and 10-day high. So there's an argument for that as a potential gain. Alcoa, that may have been the bottoming feature, and now you've got actually 2 days up, 1 day hold, and closed pretty well. So Alcoa is interesting. Look at next one. We're just going to go alphabetically. AI getting slaughtered. That's an auto short. AMD also auto short. The 30 and the 20 and the 10 are both getting worse and closed poorly. So short candidate. Big Bear automatic short on weakness. Caterpillar. The last 10 days have slowed the pain and suffering a little bit. That may be a catastrophic sell-off to 320, 2 days in a row of solid. So that's actually a great American company that could benefit from Build American, but man, that's a long way away. Cliff may have bottomed. This was on the good news of the tariffs. That's the bad news for the U.S. economy. But we got a COTA 2 forming. There's a tactical trade available. Diamonds as bad as the S&P and closed poorly. Devon Energy, horrible, miserable, bad, not good. Auto short on weakness. Emerging markets, actually better than the U.S. The 20 is up. The 10 may have experienced the badness, and now we've got a few days of consideration there. We get maybe some COTA 2 action. Ethereum, as bad as can be. Mexico, the bottoming, catastrophic sell-off, and then a rocket sled. That's almost a 10% move, and more to come. So good tactical play. There's more room for tactical play in Brazil. Home Depot stabilizing, not bad. Honeywell actually better than the S&P, and that could be a COTA 2. That one will surprise you in the midst of all the chaos. Intel just getting slaughtered, auto short. International Paper, auto short, ready to collapse below that 30-day low. Just horrible. Real estate, auto short, ready to collapse further. No support in sight. Coca-Cola, surprisingly good. Keeper. Regional banks, terrible. Short. McDonald's, pretty good shape. Marvel, in the semis, auto short. Microsoft, auto short, getting slaughtered. Marijuana, auto short. It's hard to short that at 280, but that's almost not even tradable. Nvidia, just as bad as it can be, at a triple bottom here on the 30-day low, and as a story stock, yeah, that's not good. Oracle was a very bad one today. That's an auto short on the first sign of weakness. Clean energy. Also terrible. Auto short. There's no help from the government on them. Palantir getting murdered. Well, weakness below 80 can be shorted. Qualcomm in the semis may be stabilizing. There's some upside potential. There's some COTA 2 higher lows trying to sneak in. Qs, terrible. S&P, terrible. Treasuries, remarkably strong. COTA 2. Tesla, terrible. Go to zero. UMAC, not even Don Jr. can save them. Uranium. Auto short. You'd think that would be doing better in energy intensive times, but no. Walmart actually showing some COTA 2 potential and stabilizing. US Steel. Auto short, just no help. Materials, auto short, bad shape. Energy, auto short, bad shape. Finance, auto short, bad. That's the worst sector of all. Industrials, not as bad, but not much love. And then finally, tech, auto short. So there's nothing except maybe what? Coke and McDonald's and Walmart. Woo. But otherwise, the globals, keep your risk measured and your powder dry. And tactical trades only. Bird in the hand is worth two in the bush. Follow price because this thing could turn on a dime with a couple more chaotic announcements from the orange skinned monkey. I shouldn't say that, but there it is. All right, take good care, and we'll see you tomorrow.